Bank earnings season underway. We did get results this morning from J.P. Morgan and Wells Fargo. And joining us right now is Macrae Sykes, Gabelli Funds portfolio manager. And Macrae, your portfolio, two of the top 10 holdings are J.P. Morgan and Wells Fargo. What did you think of the numbers you heard today?
Well, I think they're pretty encouraging. First, J.P. Morgan, solid results, great execution. They did raise their NII for the year, a little better numbers this quarter, lower expenses. So I think it's a pretty good setup for expectations going into next year. Obviously, we're getting the commentary and then more of the same in terms of cautious macro outlook by Jamie. Wells Fargo also very encouraging, good metrics there. They beat. They also had an outlook for pretty stable NII going forward, so that's encouraging. I think the big excitement that could be on the call at 10 a.m. is more of an update on the asset cap. There were some articles, a couple weeks ago suggesting they maybe were in their final throes of getting that removed. And so any indication of that happening in the future would be very helpful to the stock, and we still see very good value in that company.
Stephanie Link was with us earlier this morning. She owns Wells Fargo, too. And her major point about why she likes the banks at this point is after the Basel III resolution, she thinks you're going to see a big uptick in buybacks among these companies. You share that view?
It also depends on how Basel III works out, but I think there's a lot of stored capital that's being used or being held up basically on the uncertainty around Basel III. So I agree with that you could see an accelerated buybacks and some capital commitments after that, but we'll have to see.
I think these were the only two actual banks on your top 10 holdings. I know Charles Schwab was on there, too, as a brokerage, but why those two banks above all others?
Well, I think Wells Fargo has been a unique situation, compelling value, and you have the catalyst in the asset cap. And then J.P. Morgan, best in breed, great execution, and just incredible capital management and leadership there.
What potential concerns would give you pause? Is it looking at the economy, the potential for a downturn down the road?
So I think all the kind of the obvious examples would be credit, first of all, change in consumer behavior. Any macro shock, of course, and then, we're monitoring rates as well in terms of the outlook for next year and how the Fed policy is going to play out.
Yeah, we saw PPI this morning, CPI yesterday. Still trying to figure out what the Fed does next. Will it spook you if the Fed leaves things unchanged, lets it go?
We try not to get too short-term focused in playing the pinball of rate expectations, but I think what they've laid out and what you see in terms of the inflation picture going forward is a pretty steady unwinding of the rates, and we'll see how that progresses over the next year. But all in all, I think you've gotten a flattening of the curve, no more inversion, and that should lead to a better environment for the big banks.